say most of what we teach on this channel is fundamental investing, and it's a really good strategy for beginners. Let's talk about researching stocks now, because it's a very important part of this video. There are two camps that investors usually fall under. There's fundamental analysis, and then there's technical analysis. Investors who love fundamental analysis attempt to figure out what a company is worth intrinsically, which means they're trying to figure out the true value of a company based on the underlying company's health, like their revenue, their profits, their cash flow, their assets and liabilities, as well as their position in the market. By comparing the intrinsic value they calculate to the current market price, they can then decide whether or not a stock is undervalued, overvalued, or fairly priced. They can also compare the current valuation of that company to comparable companies within that industry. So pretend Google is an undervalued tech stock because it trades at a much lower price to earnings ratio than, say, Nvidia. That could be an indicator for an investor to buy Google over Nvidia. Another approach is called technical analysis. These are traders that are trying to identify ways to make money on stocks through patterns on a stock chart. They don't really care about fundamentals. They're just simply trading the price action or the trends and movements on certain stocks on a day-to-day or shorter term basis. Honestly, a technical analysis trader or investor is someone who takes a much more short-term and micro view of stock trading and investing. They rely on these patterns and these charts and these price trends to make decisions, versus a fundamental investor is someone who's more likely going with a longer term approach. The fundamental person buys an undervalued company, and the goal is to invest in these companies and then patiently hold the shares with the belief that the market will eventually recognize their true value, leading to an increase in that stock's price. I'd say most of what we teach on this channel is fundamental investing, and it's a really good strategy for beginners. So in terms of what metrics to pay attention to when researching stocks as a fundamental investor, let's talk about the 5 indicators that you might want to look at. Number 1 and 2 are revenue and net income. So revenue simply shows you how much the company is bringing in terms of total sales. Net income is the profit or the amount that they bring home after all these costs. And these are general overview numbers that are good to keep in mind as you dive more into the company's other metrics. The third, which is a big one you need to know, is called the price to earnings ratio, and I've actually talked a little bit about this in this video already. Many investors use this PE ratio to gauge the current valuation of a stock. One of the ways we use PE ratios is being able to figure out how much we are paying for a given company. If a company's PE ratio is 20, this means that investors are currently paying $20 for every $1 of that company's earnings or profit. In general, a high PE suggests that investors are expecting higher earnings growth in the future compared to companies with a lower price to earnings ratio. A low PE can indicate either that a company may be currently undervalued or that the company is doing exceptionally well relative to its past trends. When looking at a company's PE ratio or any other indicator, it's extremely important that you compare this ratio of that company's to other companies in the same sector or industry or niche.